The stock market is about to make new lows is what a lot of people are talking about right now. Hello, ladies and gentlemen, and welcome back to the Daily Show where we discuss markets around the world. Yes, we're only a few hours away now from one of the biggest data reads in the US, the inflation numbers. Will we see another spike in inflation leading to a huge decline in stocks and a potential capitulation, fearful watershed moment? Yeah, over the next couple of days, this is something that's very possible. But as we know, markets are preparing for both situations. The way we can tell this is the series of long leg dojis. Whether it's the Russell 2000, the SP500, crypto, or even dollar index, US dollars, they are all critical ahead of this news. Stay tuned as we uncover what's next for these markets. Well, welcome back everybody to the Daily Show where we talk about stocks, commodities, and cryptos. If you're interested in any of those markets, consider subscribing. But let's get started with the news. Then we'll go to the macro data. Then we'll do the lead indicators and the key levels you should be watching right now. So the ex-Fed officials seem to be on board with something very similar to what the Fed is, and they are seeing rates staying at 4.5% to 5% for a long time. Is this backed up by what we had in the FOMC minutes? Well, the FOMC minutes basically had a lot of key reiterations. We're going to leave purposeful policy sitting at the same level for a long time, or at least the near term. We're going to restrict. We're going to do all of these things. Now, I believe a lot of this is just trying to convince the market that yes, they're going to go hard on inflation so that they potentially have to do less than they would have had to. They're trying to convince the market, especially after the Bank of England, because what happened there was when the Bank of England intervened in the pension funds, which hopefully a lot of you are aware with, then that really changed the game in terms of central bank policy. It basically said there is a buyer of last resort, a bowler, effectively in these markets. Now, what the problem with that is that we all know that if inflation wasn't here, the Fed would no doubt support these stock markets. So would other central banks around the world. It's in their best interest to not have a financial crisis on their hand. Now, eventually this will end terribly, and possibly this is even the time it does end terribly. But if we get through this policy will eventually explode. I think it's pretty obvious that that will eventually ruin everything out there. One thing to bet on though generally is that the US dollar and that the Federal Reserve have the biggest upsize ability to push the ledger sheet. If you're thinking about which economy is going to fare worst out of all of these crises, it's not going to be America, the strongest economy in the world and the major currency in the world. And of course, when you have that, you have a lot of competitive edge. So what about some of the data we're seeing right now? Well, S&P 500 stocks, after 20% of the sub-industry groups are down over 40% from the 252-day high, we've just seen a reading like this. Now, in history, this has been before pretty serious watershed moments in previous crash periods. The 72, the tech bust, and of course, the GFC, the global financial meltdown that happened in 2008. So we kind of either see usually a bottoming of markets around in this area, or we see that watershed moment. And guess what? We're at a critical point ahead of a whole bunch of news coming out over the next coming days. So what are these sub-industry groups? Well, generally they're led by consumer discretionary. If you're looking for the sector that's going to get beaten most generally during pullbacks, it's going to be consumer discretionary. And which ones are going to come out the strongest? Usually consumer discretionary and technology from the drops. These are the sectors you look for those turnaround stories when the lows are in. So they're all down a lot. You can see here movies, entertainment, tires and rubber, department stores, footwear, apparel, home furnishings. It's shocking across all of those stocks. Hopefully not too many of you have been burnt by that one. And when the discretionary sector goes this bad, it generally means we're in a recession. Now, we've already talked about how we are probably already in a recession. We're just not in what they call a technical recession yet. Yeah, the markets are already proving this, and it's very, very likely the US will enter it in 2023. But what about other sectors within the markets? Are they also sick? Well, the big one is the earnings coming out this Friday. As many of you would know, financials usually start the earnings season off, and financials may be where the key is here. Financial breadth over the 50-day average here is down in the dirt again. We've had this a few times, which has been synonymous with some of the short-term bottoms of 2022. But again, the watershed moment here from 2008, financials went to basically zero. Everything was down. Everything was just getting smashed. And often this is a sector that we should be looking at on the charts. If we have a look at social sentiment, for every 3 bear tweets, there's only 1 bull tweet. So basically, the retail crowd is very, very negative on financials. And you can see this huge spike here in negative sentiment coming into these inflation reads, coming into the CCP meeting on Sunday and the earnings season. But what are insiders doing? Insiders agreeing with that. Well, traditionally, insiders have been pretty good at selling their stock at high prices. They've spiked a lot of the time close-ish to highs, or at least at points where the market's been lower at some time in the future. They're not really selling at an extreme rate here in 2022. They're kind of just like hodling and holding down the fort. And that's been kind of consistent with some of these low levels, and it could bode well. I mean, if insiders are holding their positions, in general, they've been more correct than retail over the longer term. SP 500 closing below the monthly 50 EMA. We have had this indication recently, and one of our viewers, Gary, went out there and did a quick analysis, finding that once we dropped under the 50, we often hit the 100 SMA. And that happened 62.5% of the time. So basically, the percentage drop was considerable once we got through this 50 EMA on the monthly. Yeah, it could be that capitulation story playing out again. This is a critical time in markets, and make sure you subscribe to this channel because we'll be going through, especially after these next 3 or 4 readings, whether we're breaking up or down, and of course, what that means for that then leading on a couple of weeks, if not months. Speaking of if weeks, not months, if we go from 1931 to present, of course, we've got the 2 kind of converging ideas. Midterm election years, we're about almost midway through October. We haven't quite seen the midterm election year statistic play out yet. We have continued the downward path of most Septembers into Octobers, and the turns usually were November in those cases. Here's 200 years plus of bearish data. If you want to pause the video, you can have a look at some of the percentage declines over time, how long it took, everything like that. And as we know, we are most correlated with this market. Approximately, we are sitting around this area right now, ahead of the inflation read. So this is where we got that watershed moment back all those years ago in 2008. This is where we come into the critical inflation number, the most amount of puts that we've seen in the market expiring in October in only a few weeks' time, and everything else. I mean, there's a lot to look at right now in these markets. And so many people out there have been messaging me saying, Tom, I'm done with the market for now, and I'm looking more at gold and dollar index and currencies. And I don't blame them because it's very tough to pick within this range unless you're just shorting the highs, buying the lows, and being nimble and quick. So we saw the beginning of earnings season. Pepsi, I think, came in okay. And we've now got some of the big banks coming out on Friday. We've got Morgan Stanley, JP Morgan, Citi, and Wells Fargo. Will they come out with horror show reports? Well, time will tell. Ahead of the big news and ahead of the inflation number, we're seeing a few things occur. Firstly, the VIX is at critical. This is so that it can spike high if the inflation read is bad, and maybe we'll go past that magical kind of 45 number plus. If we see the VIX past that, we're probably in a watershed moment, and the stock markets will freak out and they'll make new lows. And these can be synonymous with capitulation or fearful selling. A very interesting time in markets indeed, if that does occur. What about the US 2-year? What's happening here with yields? Again, just prepping ahead of the news. 2-year, 10-year, 5-year, they're all doing the same thing. They're waiting to find this inflation read. They're ready to break out. Either way, that's the problem. You can tell this news is super because once you go to a daily, look at how it's just been sitting there creating structure. The orders are in, they're waiting. Once they find that result, they're probably going to push it in one direction fairly large. Let's have a look at high yield bonds. High yield bonds coming in again at a critical support here, critical level, and they're looking weak. The last couple of days of candles been pretty bad across the board. The same thing goes for corporate bonds. New lows being formed here in corporate bonds over the last couple of sessions. Lead indicator of the bonds that I'm looking at, again, looks weak coming into this news. And yeah, I mean, it could switch, but it's not looking too fancy or healthy from the bond side. Let's have a look at the US dollar. What's it doing? Well, it's hit our level of supply. You can see here, this is a level we've discussed a few times. And in the previous session, we talked about how the weakness was there and that buys should be met by sell demand. That is exactly what happened over the last 24 hours. We're talking about the market here. We were ideally looking for it to come back up and not break past this 113.60. That's what occurred, and it's come back down. But look at this demand. It just continues to be super big level. So probably set an alert underneath here. I think this level is going to be significant. Obviously, you'll want alerts above 113.60. We break this, we move significantly higher for the dollar. And if we break below the low and don't instantly reject it, we're most likely going down to this 112.42. On the higher time frames, to confirm that the US dollar is actually willing to go weaker, we're going to want to see this level broken. So like a market coming down, pulling back to a level, and then at that point looking towards the short. But if it does break this new high and doesn't instantly reject with huge levels of supply coming back in, there's a real chance that the market moves all the way back to its peaks. And of course, cash will be king again. The trend is overall up. The smaller trend is currently down. And for this to really turn, we're going to need to see that level taken or a new high to be formed with this level taken. We'll update you after we see the inflation news in the next video for sure. Let's move over to gold. Gold's holding as best it can in this tough environment. This was the level that we've been discussing all week. There was a little trade in here. We still haven't broken past this last high. So this 1683 kind of zone, that will probably open up both of these supplies or resistance areas in the future. And of course, we've got the low. If this is all part of distribution, the low gets taken, pullbacks should be met by sell demand, and we could easily be back at 1644 or even the 1620 very, very quickly. The overall trend is still down on gold. You're just looking for that potential that this is a real accumulation level. We knew it was an important zone. It's currently bouncing, but it's stuck. And the reason it's stuck, it's waiting for the inflation data. This is just such a huge read. US oil, weakness continues. No signs of strength yet. You'd want it above 90 to really signify that you are feeling a bit more bullish about oil. At this stage, weakness is here, but we are in close to that level of demand that I'd like to see. I'd like to see demand hit, broke through this current structure after the news maybe, and then take pullbacks towards the buy, move through to this level, possible shorts. If it breaks that, then we move higher. I'm still negative on oil. I still think demand destruction is well in force over the next couple of months, but that's my own personal opinion. And it's based on a larger kind of, realistically concept. A lot of people are bullish here on oil, and I get it. When you're trading for a day or a few days or even a few weeks, you've got to have a totally different strategy. So all you're doing is looking for these key levels to break, which gives you the idea to have that patience to react to those breaks and then get into those better orders. Remember, if you're ever interested in this type of stuff, you can always check our advanced scalping masterclass over at fxevolution.com. and check it out, because this is where we break down these markets in such a way. And we've just launched that, so hopefully some of you guys doing it are finding it really valuable. Let's move over to Tesla. What's going on here? Well, Tesla has some serious work to do. Obviously, we're back in the bottom end of that cheap side. We've got an alert set just in case it does break through this 226. It's sitting at 217. So Tesla has all sorts of problems on it, the Twitter saga, and just in general, a lot of negative press and sentiment. It's still a very expensive stock. It's part of consumer discretionary. It doesn't really get hit anywhere near as hard in 2022 as some stocks have been, considering its value, but we'll need to see it break through here to really solidify that it wants to go bullish again. At this stage, it's coming down. It's in our fair value area. The question is, will buyers commit? Well, a lot of this has to do with the rest of the market. So let's have a look at some of the other stocks. Nvidia, it continues to hold this level. Each day it's coming in negative. It's buying just barely up and holding. Now, if we look at a daily, you'll notice that it's kind of just creating these long leg dojis, equilibrium or fair value at this level. Did have a slight breakdown though in the last session. Now, we liked this level earlier in the week because it went underneath the March 21 lows, and that was kind of exciting. That was a good little intraday kind of scalp to way up. Same thing happened with Microsoft in the last session. We tested this. I wouldn't be surprised at all during the news event to see Microsoft take the low and then possibly bounce back up. Now we've got that high in, so we've got that 228 from the previous session. We're going to want to see those getting taken. This is a clear level of previous demand. It's also the trend line that comes through 2020, 2018. It doesn't matter which stock we look at. Amazon at a critical level ahead of news. We look at something like an Apple, we're at that critical low. I mean, this looks pretty terrible, frankly. You've got a closure on the lows, but this is more of a news event trade than anything else. Previous little bit of demand. So any market spikes down could be met by instantly some little buyers here. It's a very, very, very tough time. Let's have a look at one of the biggest market indicators, I think, right now, and that's the Ftse 100. A lot of people don't look at the UK markets, but shout out to our UK and European viewers out there. This thing has been setting up for so long, and it's back down at critical levels. We've had this alert sitting here. Look at this thing. It's horrendous. It's been sitting there for quite a while, basically distributing. Now, if we breach it, is that significant? It again feeds into that idea of that potential watershed moment. You've got to be very careful in these markets and really just practice safety and risk management, because if these markets come through, the next level is not until 6,400 or even significant lows. I mean, yes, there's some little miniatures in here, but you've just got to remember these are all considerable percentage points down. So watch out. UK 100, certainly one to be watching. If we move over to the DAX, it's kind of similar. We saw that huge breakout recently. The DAX has been weak. The DAX pulled back into this zone. Still a lot of transactions. Look at that volume really spiking up here. A lot of position placement ahead of the inflation read. And we still have that major kind of big demand or previous lows here caused in October 2020 to potentially hit for the DAX. So yeah, some serious weakness could be there if the wrong read comes in. Let's have a look now at the Russell 2000. This was where we started. Equilibrium across the board. Long leg dojis and nothing much else. The market just keeps spiking up and down. Now, the small caps are doing way, way, way better than the rest of the market. They're holding up pretty strong. In the previous session, they lost a little bit more, but we even saw some buyers coming back in. Do we get a new high? This 1710 plus level. Haven't seen that broken yet. Structure forming. We've got the lows and the highs. If we do breach, the problem is that the Russell could be that kind of, we had some strength. Now we're finding weakness. That's the straw that breaks the camel's back. I'd love to see the Russell break through the 1710 and then solidify that we may be seeing some nice buyers come back into this market. The SP 500 is very similar. If we take a look at this, really bad kind of closures. Again, red, 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 red. Every close is just coming in bad. That's 1, 2, 3, 4, 5 reds in a row. Now, we don't often see too many more than 5 or 6 reds in a row. We have had it 1, 2, 3, 4, 5, 6 reds in a row, followed by a green. But we're starting to enter that kind of statistically likely turnaround story just from a series of serious amounts of reds. Now, if you go through, there's not that many times where you get over 5 and you don't get some reprieve. But based on that candle close, I mean, there's not much to like there. If we move over to the US 100, again, critical previous demand here back in September of 2020. Those are the demands that we saw. Markets currently testing that. Horrible looking weekly candles, there's no doubt. Pretty strong closures on the lows as well. If we look at the futures market, there's no really huge wick purchasing yet, and a very tough zone. Again, got alerts setting above because I'd be prepared to lose out on getting the absolute perfect price here to actually see some confirmation and see some actual real turnaround stories. This is not really the candles that you'd like to see from a turnaround story. Usually you have a lot more wick buying, similar to what we've had in previous lows. That's not what we're seeing right now. US 500, here are the previous days kind of supplies and demands. You'll notice I put a new little alert just from this sell-off that occurred through the last session. I was actually looking for that get broken. Didn't happen. 36.20. We've hit the demand again, and we've seen buyers through the last session. So that might have been a good little area to to target in the last session if you're trading the range. And we're now sitting basically flat as attack at the end of that session. A series of lower peaks or lower highs coming in. There's not much to like about this right now. It just looks like the buyers keep getting less committed and the sellers keep pushing it down. So each time it comes up to test the supply, they say, no, we want to position low. At least that's what the story of the market is telling us right now. If we scroll out and we look at the future for what could happen, the biggest issue that a lot of people are going to face is, where do we go if we make a new low? Do we just tap this little 3,500 zone and spike up, a level that a lot of people have been looking at for ages? Or are we going right into the middle of this range? 3,400, the previous pre-pandemic highs and the middle of this structure. So 3,500, this is an issue. We've got 3,500, 3,400, and then after that, most likely that 3,250 range, which is the bottom lows here. This is what a lot of bond market traders have been calling for a long time, that 3,250 area. But all of these zones are going to be important moving forward through this market. Crypto is doing absolutely nothing as well. Bitcoin is just boring coin at the moment. I'm sorry, crypto guys, it's boring coin. We're not seeing any movements. I think you'd all agree it's boring coin. And yeah, it's not breaking the highs, nor is it breaking the lows. But imagine if the market does go bad. We get through that 18,000, that 17.5. Whoa, capitulation could be in. And I've said this before, 83 to 86% negative has been generally the falls that crypto has seen during the crypto winters. That puts us at 11.5 to 9,500. It's pretty scary. A lot of volume through this area, a lot of trades through this area, but no clear direction. It's all ahead of this news. So we've spoken about it constantly today. Inflation reads here, 8.1 expectation, so it's expected to drop. Will the inflation drop? I kind of hope so. I know a lot of you will say, nah, let's get it up higher so I can get my puts printing. Yeah, I would rather the market just goes up or at least find stability, just because I know so many people will suffer if the market does go down. Relatively speaking, though, we do want to see inflation start to, figure itself out. Core retail sales on Friday, retail sales. We've got also the prelim UOM sentiment. We also are seeing a bunch of COVID case increases in Shanghai. This is ahead of the CCP meeting this Sunday, the 16th. There is so much going on in these next couple of days. We've got potential policy changes from out of China. If that happens, could be a massive bullish catalyst. We've got the bank reports. We'll find out what happens there. Core retail sales, and of course, the inflation read. Stay safe out there, guys. If you enjoyed today's content, make sure to subscribe, smash that like button, and we'll see you in the next one. Bye for now.